What's up, everyone? Welcome to episode number 2 of Mind Money Method. Super excited. We have an awesome guest tonight, The Rock Trading. Very, very eager to jump into the market sentiment we saw last week and what we're looking at going into this week. So he's a perfect guest to discuss all of that. Go ahead and if you are tuned in here, go ahead and smash the like button. Let's get some action and energy going. Share the stream with the rest of your feed if you're on here, and let's rock and roll. All right, I'm seeing some TRT fam here. Welcome, welcome. And Antonio Miller, I think you are #1 MVP. I've seen you quite a bit lately, so shout out to you. We have an awesome show ahead. The Rock is going to be joining us here in just a little bit. We do have some really good topics that I want to cover, I think, that are interesting for a lot of us right now. What we saw in the market last week, the IWM, SPY, QQQ, we're going to cover that. We're going to look at, market sentiment going into this week, how to navigate it, and maybe even play both sides of the market. And then we're also going to look at position sizing, how to scale in, as well as a day trading strategy from The Rock. So as always, I love, learning a little bit from each trader and sort of tapping into their simple but significant strategies and their perspective on the market so that we can learn a thing or two. Before we get started on all of that, I do want to discuss last week and, sort of the price action and what we saw. If you guys have any stocks that you were in last week that did well, tell me about them in the chat. I'm super curious. My #1 last week was SNMP, which is an infrastructure play. And that one has just, the last 4 days have been green candle after green candle after green candle. But I will say the rest of the market was showing quite a bit of weakness. So I do want to jump into a little chart over here. Dive in. Okay, so I've got the IWM, which is the ETF for the small caps. And I want to get in here and maybe look at a little bit of a trend line. Let's make that bigger. I'm super curious to see what we have ahead for us Monday, if we're looking at possibly a bounce in that area, or if we're going to continue to go down lower. But as you can see, the last few days, we had quite a few red candles right there. And I think that that was reflected in a lot of our stocks. So one thing that I think is always very important to keep in mind when everything's going down is, it's not your stock, it's not the company. I think it's super important to keep an eye on general market sentiment and how that's affecting the trajectory of everything. We have a comment that says, please don't talk about last week. It was a disaster. You're not alone. It was a tricky week for a lot of people, which is why I'm really excited to have The Rock on to sort of anticipate how we can navigate that moving into next week. But the other barometer that I really like to look at is the UUP, and I'm going to pull that up. That's basically the US dollar. And it'll give us an idea of, let's make this bigger here. Okay. So the UUP was trading stronger the last couple of days. As you can see, the dollar's actually been relatively bullish, which works inverse to the market. So keep that little tip, keep that barometer in your back pocket, because if you ever start the day off and you see that the dollar's trading really strong, that could be an indicator that we're going to see some weakness in the overall market. So keep an eye on that. And yeah, I think my strategy going into next week is not doing what I did in, let's say, like February to May of earlier this year, because there were certain stocks that kept dipping. And I thought, you know what, like, I think we had I called it big dip energy. My whole feed was buy the dip, buy the dip, buy the dip. Everybody was saying that for weeks on end. And, I think that was a good opportunity to learn that sometimes the dip can keep dipping, especially after you break the 200 MA and it just keeps going. So I'm looking into not repeating some of the mistakes that I did earlier this year. What I like to do instead of buying the dip is sort of nibbling into plays that I have more of a long-term outlook on. So I highly recommend having a bit of like a shopping list. Is there a play that you believe in long-term that there are some crazy bargain prices out for right now? Maybe the RSI is completely oversold. Maybe it's at a really great support level. But with that said, since we've learned that there are certain trades that can continue to go lower, even though we think they're at the perfect place, buy a little bit at a time. If it's something you have high conviction in, buy a little bit now. If it goes lower, then you can buy more. But what I don't recommend doing is buying everything and thinking everything's on sale, because you just want to have a healthy stock to cash ratio at a time like this. That said, I do want to dive into one of the stocks we talked about with radio last week, and that is TTOO. And this is a bio play. And I'm going to draw just a little trend line right here and show you guys this one. So this is actually a COVID play as well, because they do diagnostics for COVID and other ailments as well. But what we're looking at right here is we're pretty much at the bottom. So I would like to use like this 101 area as my floor. And this is about when I started adding right here, when we saw the 2 green candles. I saw us like starting to bounce off this area. I do think if you have 101 here as your floor, the risk to reward ratio is one that I feel good about here. I don't feel like we're taking on too much. And this trend line actually can continue quite a bit. So as you can see, hopefully we've got some good support there. It's a Delta variant, unfortunately, is something that's coming up in conversation again. I know in California, we just reinstated wearing masks indoors. So all of that stuff is going on. I think it's a relevant sector and it's a stock I like. But yeah, moving on from there, I am curious to see how cannabis plays go moving forward. That's another sector that I have my eye on, just because I feel like it's been beaten down for a while now. So that clean energy, there's a few things I'm looking at, but I'm not going crazy shopping because I've done that before and I've learned from it. So with that said, like I said, we have a great show ahead. We do have The Rock trading on, and I'm super curious to pick his brain and, learn more about his strategy and style. So with that said, let's go ahead and bring him on. Hey, John.
All right. Hey, good afternoon. How's it going?
It's going. It's good to have another West Coast friend on here.
Yes, of course. Good to see you.
Good to see you. So I love having you on, especially for this episode, because I've been watching your feed and I see that you were a little bit of a bear last week on certain plays. And I know that can be controversial. We all have our plays that we're passionate about. We want to see them just continue to go up. So when someone says I have puts on this, it's almost insulting for some people. They take it personally. But it's all about navigating both sides of the market and, learning to make the money. So before we dive into all of that, I want to know a little bit about you for anyone who's checking in for the first time, your trading style, your background, how you got started.
Sure. Yeah. So in my early 20s, I did the whole corporate climbing thing. I was fortunate enough to work with the Fortune 500 company, and they put me through college, actually.
Wow.
My aspiration in my 20s, at least, was to, become an executive vice president. And I really worked hard in my corporate 8 to 5 job. I also had a family at that point. I bought my first home in my 20s, and this was literally right before the housing bubble that happened. So when that happened, my company actually started scaling back, and I stepped out of corporate at that time. I did have other businesses and other ventures going on. I'm a pretty much an entrepreneurial spirit kind of guy. So I always have stuff going on the back burner. And that's about 2010, 2011 area was when my life just right about when I turned 30, my whole life just kind of did a 180. So I was going through a pretty nasty separation with my wife at the time. And I started trading with some money I had saved up and some of the severance package money that you get when you leave corporate, when they lay you off. And that's really how I got started in trading. Back at that time, with the recession that was happening, that was a very good opportunity for, Disney was trading at $13 at that time. I mean, what's not to like? So that's when I really started trading. I got into investing more so for the first year or so until I started to learn, diving into technicals. I did a lot of swing trading and day trading as well. Around about 6 years ago, I decided to go full time. I still have other businesses on the side. My wife, my new wife, has other businesses as well. So it's been a blessing just to be in this type of position to help others and to be able to help the FinTech community, etc.
Yeah, I think that's amazing. I know you were probably one of the first people I started following when I started trading. And I think that you always have good content out there. And it looks like you're very big on diversifying your strategy based on what the market is saying. Yeah. So I think that's really cool. And it's also super inspiring because I think a big part of trading for a lot of us is, we've started out with the corporate job or the 9-to-5 or the minimum wage, whatever it is. I think the beauty about trading is it gives everybody an opportunity to create something that's their own. And, whether that allows them to leave the corporate job, which ended up happening for you, or just to provide a little bit extra for the family or something like that. I think that's the beauty in trading, is to be able to take on those opportunities.
Oh yeah, absolutely. You don't have to wear pants every day. So
no, I'm in sweatpants down here right now. Yeah.
There you go.
Absolutely. So here's what I want to do. I want to talk about what we saw last week, sort of the market sentiment, how you're processing what we're seeing currently, maybe what you're anticipating. We don't have a crystal ball. We don't know for sure, but into next week. Just overall market sentiment.
Okay, sure. Well, let me go ahead and share my screen here. Can you guys see my screen okay?
Let's get that in there.
No, okay. So I got my trading view on.
There we go.
Okay, cool. Well, first off, I think for anyone who started recently trading within the last, let's say 12 months or 16, under 2 years, just know that for the most part, 2020 has been obviously a phenomenal year for the bull market. Ever since the pandemic that happened back in March, obviously when everything got shut down. If I'm just going to go ahead and dive into SPY real quick, and we saw a dramatic crash. This is a definition of a market crash. All right. And we've been on this huge run. If you guys have looking at my screen here, we literally started at 218 SPY, and just 4 days ago, we hit nearly the highs of 439, almost 440, and now we're pulling back here. The weekly RSI on SPY has been trending near 70. So that should tell you right away that the SPY, at least for the most part, has been trending into overbought territory. Now I'm pretty well versed with the Elliott wave theory. So if I actually just kind of do a 535 count here, for those of you who are familiar with Elliott waves, this is pretty much, it's been on an impulse move since last March. Okay. So when I started getting very bearish right about last week, the week before, and going into this last week we just ended, I can see obviously that a lot of these indexes and futures are getting well overextended. So when you see things getting overextended, this is the time when you need to start being a little bit cautious in terms of swings and long-term positions. So here, what I'm projecting here, at least I'm using the Fibonacci retracement as well off the highs of 440. You can see that the 432 did not hold on Thursday afternoon. Now, this was interesting because on Thursday afternoon, as soon as the bell rang, I looked at this reversal doji. This is a classic reversal doji, and it should, and candlestick reading should give you a good indicator in terms of, okay, where is the market really going to bounce? Is it going to return back? And dojis are classic, definitions of reversal, but we saw that it didn't happen on Friday, and instead on Friday, we kind of gapped up a little bit to about the 435 area, and we closed way below the 432 support line, which is the 23.6% fib channel here. So what I'm looking for in terms of this upcoming week, I would hope that we would obviously bounce for the sake of our portfolios and any swings you got going on. Mm-hmm. But if it fails, you're looking at a 429, 426, etc. Now, after this impulse move, you have to expect correction, right? According to Elliott wave theory, this was the trendy move, right? And after the trendy move comes the correction. Now, if I'm correct here, then if I pull up my, my wave chart here, give me 1 second. So if I do an Elliott correction wave, the Elliott theory, or the wave theory, says that the correction off the top should be between 50 to 61.8%. All right. So we could see a move down here, a move back to break the highs, and then one last pullback before another run past 440. Okay, so you can expect that SPY at some point later this year, if the markets continue, or even into next year, we can see SPY well over 450 or even 475. Unfortunately, at this point, if you are a swing trader, your swings are not going to do very well. The only thing that you can do in this going into next week, we have to feel it out. I don't know. You got to scalp. You got to go for the high volume runners. You got to go off stocks that's pumping on news, or you do put options, or you start shorting stocks to protect your swings or your long-term investments or long-term swings. So for me this week, key levels to watch for is this 429 mark, 429.41. If we can stay above 432.90, great. The only issue with that is that in a correction wave, if we are going into a correction, is that there will be also a 5-wave movement. So it could do something like this. And I'm just it's very broad. Sure. But it could actually bounce up, and then it may be weak, continue, and come back down. Finally, in about maybe a week or two, we could end up with a SPY around the 420, 423 mark. All right.
Well, and I want to touch on something you said. You said in terms of swing trading right now, you may want to be a little bit cautious. You may want to scalp, go after the momentum plays. And I do want to pull up, this is the current fear and greed index. So, we've definitely had no shortage of experiences with extreme greed and euphoria. I feel like that was a lot of last year, earlier this year. And now we're in extreme fear. And, one thing that I see normally when the market's a little weak is everybody flocking to that one or two super high volume play.
Sure.
And anytime that happens, I do see that weakness in the other stocks because everybody's just looking for something, so they're jumping onto the same one. So I think what you mentioned is very important to keep in mind. And yeah, it's just.
I think long term. I think long term, personally. I mean, the markets is going to be fine. I mean, some of the things that are weighing on the market is obviously we had the CPI news on Tuesday, and the inflation is exceeding estimates, right? So anytime you have that happening, the investors are going to pull out. Okay. Also, the Delta variant. If you guys been on the news, they're painting this really nasty picture. especially with the Tokyo Olympics coming up. A couple of the athletes have already tested positive for COVID or the variant. So those things are going to weigh heavily on the market for the foreseeable future, at least into the rest of this week and going into August. As much as I wanted small cap summer or small cap season to
it sounds so good, right? Small cap summer.
It sounds so sexy, right? I mean, just we can just make money, right? And well, the unfortunate thing about the market is that once you got it figured out, you realize you don't have it figured out.
Exactly. So, you know what?
Yeah.
And I'm, like I said, I've been trading for about a year, but that's the fascinating part to me about all of this. Radio says I either win or I learn, right? And even when the market's not in my favor, it's so cool to me to be experiencing these things, because you're going to have to learn to adapt to the market, and you can't get overconfident. You know, like you said, the second you think you have it figured out, this is going to happen, you're going to get surprised. It keeps you on your toes. It keeps you humble. Yeah. And that's kind of fun. It's exciting.
Well, even though I'm bearish right now on the overall market, I mean, I could be completely wrong before opening bell tomorrow. So don't shoot me.
Nope. There's no crystal ball. We just anticipate, and we kind of discuss what we're seeing from our perspective.
Right.
So with that said, you've been scalping a lot lately.
Yep.
Or doing puts. Okay. And that, for the most part, is your strategy moving into next week as well?
So far, I'm going to have to look into pre-market, see how that's going to look like. So far, the futures, as last time I checked a few minutes ago, was red already. So we'll see. You know, so for the most part last week, I put and short large cap stocks because it was so, I mean, it was like most of the stocks in like Nvidia and Tesla even, and also what was it, Amazon, all coming off their highs. If you look at my QQQ chart here, and this is my leading indicator in terms of what to do for the next few days. You know, you can look at this trend line on QQQ, and it's pretty interesting. So you have it's definitely making higher lows, which is a good thing. All right.
Right.
Now, once again, if I applied the Elliott wave theory from March 2020 last year, right around here, you can see that this has been once again, right, 169 to the highs of 365, over 125% move in the last 13, 14 months or so. So of course we have to, if you expect that the market is just going to continue to go straight up forever, well, that's wrong, right? There's got to be time for correction. And every once in a while, there will be a crash. Now, I'm not predicting any type of crashes in the near future, unless, of course, states here on the United States, unless the states are starting to roll back lockdowns and all that, and COVID gets out of whack, out of hand once again. But if I just take a look at this chart, I don't even really have to do an Elliott wave to show that, well, it's reached a peak of 365, and the next move is likely to hit this trend line here, which is roughly around the 336 mark. Okay, so the market is absolutely factoring in or very fearful of inflation. Even with earnings seasons coming up in the next couple of weeks towards the end of the month and beginning of August, inflation is going to make some of these earnings look not that great, if that makes sense. So we'll see what happens here. Obviously, if this is going to come down here, there's going to be bounces. But you know, if just to kind of further prove my point, if there's a point to prove here, QQQ. If I look at Amazon. All right, Amazon on a daily chart, this has been trending red for the last entire week off the highs. Now, if you look at Amazon, there's a gap to be filled here, and it's once a gap is obviously in this downtrend, it's like a magnet. Okay, the short sellers, the market's going to continue to push down the stock for a cheaper price to get in. So watch for this gap and watch this week for 35.38 on Amazon to break. If this breaks, then it's going to fill this gap real quick, and we may even capture Amazon at the low 3300s for the next move up. All right. Oops, that's my desktop. One more, I'll just kind of give you guys more examples on the tech. Look at NVIDIA and how poorly it's been performing, even with the news on Tuesday that they're going to split their stock. It's kind of a natural, sell the news type of event. So what are we watching for NVIDIA? Well, 710 is the next level here. And if that fails, then you're looking at lower 6. I definitely, obviously, there's going to be a few bounces. And if I look into, let's just say the 3-hour chart, that there's been almost no bounce on the 3-hour chart. If I look at the 4-hour, you can see that a pretty strong selling pressure on the downside. Tesla, I'll do one more example here. Tesla, as I expected, hit 620. All right, bounced up, failed against this downward falling wedge here. And I'm using a 4-hour chart. Very nice chart for Tesla going forward with a nice wedge setup here. And I'm just afraid that Tesla's going to fall below 600. And then once it hits 540 or 550 area, it'll make a huge move. It should make a huge move. And I do expect Tesla to be a great long-term play. But I just be cautious right now in loading any dips here on Tesla until
sure.
6.
So it seems like the overarching sentiment is not the best time to go crazy shopping because we're in an uncertain time period. And that doesn't mean be crazy fearful. That doesn't mean don't do anything. Just be very selective in what you're trading. Make sure you have a plan. Don't over leverage yourself. All the basics. And I think, like I said on the last episode, is if I had all of my cash in stocks right now, I'd be a little concerned moving into next week. Or whatever's to come. But if you have a healthy stock to cash ratio, when and if these pullbacks occur, it's not the end of the world, and you can manage your risk.
Yeah. And if you covered IWM earlier, and this is what it looks like right now, you can see that IWM on Thursday had a reversal doji, and that was a fake out as well. This looks just like the SPY chart in terms of the candlesticks reading. So this actually broke trend on Friday afternoon. So if this breaks trend, so the next IWM stop is next bounce could be 211, and you do not want to see IWM under 200. So I am cautious, just like you, but if tomorrow IWM does not perform, or does not bounce back within channel, then you are looking at a broader small cap sell-off.
And I know a lot of people are thinking, wait, they're already so low. Like, so many of my favorite plays are under their 200. They're breaking 200 MAs. Like, they are not performing well. So you're saying this could go even lower. So just something to be mindful of.
Yeah. Well, if you look at some of the small cap stuff, I'm looking at NEO, for example. It's already traded. It closed Friday under the MA 200. So I know that usually a lot of traders love to pick up the dips off the 200. But in the corrective state that we're in right now, that's not even the best choice. You're going to have to look at, you're going to have to identify patterns or just sit it out. If you look at my favorite stock, FUBO, FUBO is trading also under, also under the 200 as well. It's my other favorite stock, CCIV, which I will be forever bullish on. It is approaching the 100. There's no, 200 as well. So it actually closed under the MA 50 on Friday. So just by looking through some of these small caps, I know a FinTwit favorite right now is Wish. And Wish does not have an MA 200, but it is obviously trading well under all the moving averages from
right.
So you look at this chart and you're wondering where the bottom is. As a trader, you're going to have to get a little bit more sophisticated in your technical toolbox, so to speak. So if I go back to my trading view here, one of the ways that you can do it is by looking at, once again, the fib channels and where this correction is going. There's one more correction for, if I'm right. If I'm wrong, I'm wrong. But if I'm right, then it's going to come down before another bounce.
So for anyone who's tuning in, who's not accustomed to using fib channels or the Elliott wave theory, can you simplify and give me like a brief explanation of each one and what they help indicate?
Yeah. Well, this gentleman, John Elliott, back, I believe, in the, I, not well versed in this, I think in the 40s and 50s, what he did was he studied stock chart or Dow Jones movement. I think he tracked it over, I believe, 20 to 30 years. And he literally just came up with this wave theory that all stocks in a trendy move do have dips, right? We always say there's going to be dips, there's going to be corrections, and he came
even
up
on the way up,
right? Even on the way up, there's going to be corrections, right? So so he came and he started to formulate rules and retracement percentages and things like that. You know, if I go back to SPY, for example, so basically he by using his theory, you can for the most part, with high probability that you can predict or anticipate the corrections when they'll come. And, you know, and he also used a variety of wave theories in terms of like 535, 5555 move. There's so many. I'm not the king at Elliott waves, but I'm always learning. So I'm sure there's other people well versed in that. Fibonacci sequence is a classic. You can adapt this tool on any chart, and that is obviously with every correction. Every impulse move comes a correction, and it just so happens it follows this Fibonacci sequence. So if you were, let's just say, for example, FUBO. All right. If you look at FUBO, let me get a clean chart here. OCGM maybe. All right. When stocks retrace, let's just say, for example, I'll just use the fib here on this recent move here. All right. You saw that OCGM back in April went from a $5 stock into a $16 stock. So it was a 200% movement, correct? Once the highs, right? Once a high has been detected, they retrace back to these golden ratios, okay? And they generally find support at these ratios. They either bounce or do a dead cat bounce, right? They either fly back up, right? If the sentiment is very still bullish, or it can continue to break your fibs, right? So right here at a 100% retracement would be $5.27. So far, we're kind of touching, we're getting there in terms of this retracement goes from the $16 hit.
It's pretty amazing when you draw the lines out and things go according to plan.
Sure. And you can see right here too, you notice these these upper wicks on these candles trying to come up into $10.72. So you can see the bulls trying to step in exactly at this fib retracement. So I'm not the only one that used fib retracement, right? So why is there a lower shadow right here on the 765 line? Because the bulls figured that was a quick entry or even a swing entry for a couple of days so that they can get what, $9.43 or $10.72 out of it. If you bought here for a 2-day swing, congratulations, that was a 30% move, right? And
so it can be a bit of a self-fulfilling prophecy because different traders are looking at the same thing and anticipating certain moves.
Exactly. So the market sentiment, right? So the market continues to do that until it cannot break it. So you see that it fell back into this support, and then it did a quick bounce up to the $9.43 resistance, and that became a new resistance, right? And so once that becomes a new resistance, well, it's going to come back down until the sentiment changes. Obviously, OCGN, bad news, blah, blah, blah. All right. It's trying to come back up and boom, fails again. So what's the next move for OCGN? I think we're ready for a big move because this correction is overextended.
Yeah, we'll keep an eye out for that one. I do want to circle back to something. So you mentioned CCIV, and anyone who's tuned in right now in the chat, in the comments, first of all, make sure you hit the like button. If you're not following The Rock, his handle's right up there, _Rock Trading. He's got great insights. He's always posting pro tips. The third thing I would love from you guys is, in terms of EVs, I know that everybody has a go-to, a favorite they're very passionate about, whether it's IDEX, CCIV, Tesla. So I want to hear in the comments, like, what's your go-to? And then, John, what I want to hear from you is why you are so bullish on CCIV. The heart eyes.
every once in a while, you take a look at the fundamentals of a company and what the potentials are in the future, right? So CCIV Lucid is obviously one of my favorite going into the future. I most likely will hold a stock for the foreseeable 5-6 years down the road. It's going to be interesting this week because obviously, the merger is set to close on Thursday and it's going to start trading as LCID on Friday morning. So I'm here for it. If I sense that it's going to sell off on news, then I will pick up a new position at a much lower price. I'm okay with that. If, however, this thing blasts off into $30, then fantastic. We might have a winner. Make sure you guys take your profits. There's nothing wrong with being a long-term investor and actually selling the stock and taking profit and coming back further down the road, because once after every SPAC merger that we've all been through has got its big pump right at the merger, and then after the merge, the hype dies down and finds a new floor. We just find a new floor, right? So who knows where CCIV or LCID is going to be with the new floor. Now, going into this week, you guys already saw Tesla sentiment is pretty weak. NEO sentiment, China EVs, XPEV lead, all of it pretty weak. I mean, FSR is trading at $15 or less. And if you look at CCIV, obviously that sentiment carries over. So we held at least the lower 22 support this week and bounced off. But you see this upper, I'm looking at the 4-hour chart, you see the shooting star candlestick with the high wick resistance right at the 2383. So people were just swinging this or scalping this. All right. Now, what's going to happen this week is if volume comes in, then yeah, we can see this a nice move back into perhaps $28 will be very nice and potentially 30. So no idea what's going to happen. This is one of those SPACs that you just can't tell.
I love what you said about taking profits still, even if you are long, because I will say with Fisker, I bought that very early. I bought it when it was SPAC. And, on that first climb up where, gosh, I can't even remember, we hit almost 30, I believe, on FSR.
32. Yeah.
And I remember on that leg up, I didn't even log profits because I'm like, I'm long, I'm sticking this out. And so what I did when we had the deep pullbacks and went all the way down to 10, I bought more and I made sure, you got to ride those waves. It's not just hold on forever, because there will be many, many ups and downs within the uptrend or the downtrend. And if you don't lock some profits, it just, it's a lost opportunity. John, what I do want
is you have to, you got to figure out what percentage of your portfolio are going to go into each trade. And you also have to figure out by end of the week, how much do you want to be in cash position? My rule has always been by the end of the week, I have to be at least 50 to 60% in cash. All right. And that means if I have to cut some swings that's just not performing for me, then I have to let it go. So for example, let's talk about position size. If you have, let's say, a $10,000 portfolio, and you should be able to allocate at least, I would say some experts say 3% per trade, but I'd say that's a little bit small. I want to say 5 to 10%. So if you're going to go for a swing, right, your swing should be $1,000 maximum, right? You don't want to go 50% in your swings. You don't want to do 90% of your portfolio just because you have high conviction. Because what happens is that if you put 9,000 out of $10,000 in a portfolio, and every downtick is going to just stab you in the back, right? You get that feeling. And then you can't sleep at night because you don't know what the markets are going to do to you tomorrow, right? So if you do something like that, you're going to blow up your account rather quickly. Remember, if you're going to be a trader, you want to go do this for it's a marathon, or not a sprint.
Marathon mindset all day.
Right, exactly. So I would say 10%. Now, with that 10%, let's just say you want to start scaling in. I generally do 3 scale ins. Okay, so if you have $1,000, you scale in $333 at a time, 1/3 at a time. Okay, what you want to do is, if number one is to establish where your floor is, right? Where you enter and where your floor or your bottom support. If it hits your support, right? Let's say you buy into the trade, it hits your support and it bounces off the support. I love that. Then you allocate another $333 in. Okay. Now, if it actually breaks your support and it closes under your support, I know this is one of radio's rule. If it breaks the rule for 2 consecutive days under your support, then you know you have a losing trade. If you have a losing trade, you don't go averaging down on a losing trade. Okay. I'd much rather average up on a winning trade, not averaging down if it just continues to break support. If you look at my wish chart, and sorry, wish bulls, don't hate me for this. If you, unfortunately, a lot of people did buy at the top, right? With the recent run to 15. So they're trying to catch the support at every possible dip, right? And loading up for future position. While that is good, okay, but look at how much money or how much of your portfolio size are you allocating to this particular stock. If you are sitting 50, 60, 70% on a stock in your portfolio and it's bleeding out every single day, then I'd say that you need to rethink your future prospects as a trader.
100%.
Right.
And I think we do often talk about, you know, emotions and trading psychology and how they go into play. And like you said, you want to be able to sleep at night. If you have all of this money allocated towards a trade that's on downtrend, or you're putting the majority of your portfolio in it, you're going to get emotional about how you operate. You're going to sort of dismiss the rules and the structure and the plan that you had and feed into your bias. And I think that can be a pitfall of a trader and a way to blow up an account, like you said.
Sure. Absolutely. And you know, and when it comes to a stock like now, the wish chart is very different from the OCGN chart, which is another one of my small cap favorites. Now, if you look at this chart, it has a really nice support right above $5.50, $6 range, right? So we know that it hit 611, right, on Thursday, and it bounced away. So therefore, that was a good, potentially a good area to load up on because, well, it stayed above this 596 floor. And so, at least for the last several months, we still have somewhat of a higher low. It's even though it's really weak. And of course, there's the MA200 sitting at 523. So with stock like this, because it is trading sideways, not in a downward motion, then this is something that you can average down on, right? With stocks that's like, you know, I don't know, I'll just take a look at, don't hate me, IDEX people. All right.
I have some IDEX, yeah.
Right. So,
but I won't hate you.
You know, of course. So it's trading well below the MA200 at this point, and it didn't hold in this last week or so. But you know that there is a really nice solid floor right about the 225 area. So if this comes down a little bit more and bounces away from, let's say, 2.25, then yeah, that's a loading zone. This is still trading sideways off this correction, off this wave up to 553. This is okay to hold and to load. But what's not okay is charts where it's literally in a knife fall, right?
Very clear downtrend. Absolutely.
Okay. Yeah.
I think that was actually a really beautiful lesson right there. You know, when to keep adding the dip or feeling a little bit more comfortable doing so versus something like Wish, for example, that red candle after red candle after red candle.
Yeah. Well, you know, again, I mean, I still have a position in Wish. Unfortunately, I do, but you know, I still believe that at least the long-term prospects of the company, I think it is way undervalued for what it does and how much sales that it garners on an annual basis. But you know, the market's just has this tremendous selling pressure on Wish right now, and that it is what it is. So. You know, you don't want to keep trying to catch the knife, and it just keeps hurting every single day.
Absolutely. I do want to jump into, so we're all about learning new techniques. If you want to give me a quick overview of your day trading strategy, because me personally, I'm more of a swing trader. Sure. Scalping, day trading, it is not in my wheelhouse. And a big part of that is not being able to stare at a computer all day and really be there for those quick movements. But I would like to learn more and sort of add that to my toolbox. And I think a lot of other people would as well.
Sure. So as I always proclaim, or as I've been talking about, is Scalp City. That's kind of my terminology for it right now. You can see these. I'm going to pull up SGOC. I'm sure a lot of scalpers are very well aware of this particular stock. Running on low float, high volume. I don't really understand the hype around the stock, but it is what it is. So back last week, I think, on July 9th, it ran from $2 to literally $18. And the next day it ran to $29. So if you are a scalper, this is absolutely
wow
stock to go after, right? So my personal strategy, there's a variety of things that I do on a 5-minute chart. I trade off the 5-minute. I don't do 15. I don't do 1 hour. I don't do 1 minute. I do 5-minute charts. And I have primarily 2 indicators to look for, which is my EMA, which is it's a SMA, but it's exponential moving average. You can definitely Google that if you like. But I use the EMA 915 as an indicator of a breakout and also support when it comes to the 5-minute chart trading. So
real quick, an EMA versus an SMA. An EMA is much more focused on the current price point and the current price action. It's more weighted on that.
It's more weighted, of course. It reacts to the price movement faster than a simple moving average. But I know a lot of people still prefer SMA 5 or SMA 10, et cetera, and that's cool too. It's literally going to be about 5 cent or 10 cent penny difference, dime difference, but a dime could actually mean quite a bit, especially
in a scalp. Absolutely,
in a scalp, right? So in my day trading, if I'm sitting in front of the stock, and most of the time you're not going to be able to catch a high volume runner, excuse me, off the first few candles, right? So what I'm looking for in a scalp is particularly once I miss out on the big jump. Okay, this is the initial impulse move. What I'm looking for is a support, or that the price holds above the EMA 9. All right. If the price holds above the EMA 9, and I still get a sense that this run, that there's going to be a second run after this, or maybe the volume is starting to increase again, you guys can definitely take a position and ride the EMA 9. Now, the only problem is you got to know when to get out as well. So with that being said, you're going to have to use Weeble's Fibonacci extension, which is
and real quick, John, I'm sorry to interrupt you. For anyone who's just tuning in, this is a 5-minute chart, right, for your day trading strategy?
That's correct.
Okay.
Yeah. So this is a 5-minute chart once again. So if you miss this particular up move or big move here, you have to wait for the pullback. And I always recommend that you just sit back, wait 15, 20 minutes. Let's see how it plays out before you jump into the trade. What you want to see is that, number one, it clearly holds the EMA 9. Okay. Now, a lot of people ask me, well, when should I leave the trade? Well, when should I scale out, or where do I take profit? And this is where Fibonacci extensions can help you determine your profit targets. If you get in, let's say around this area between $9 and 10, you want to see that the movement starts breaking into higher into the fibs, okay, into the fib channels. This, every time it starts breaking into the fib channels, this is a profit target. Stop. Don't be greedy and try to ride this thing for 100%. Take profit on the way up. If it comes back down, great. Let it do its thing, because why? It's doing a bull flag for you. So if a bull flag forms, all right, on the 5-minute, then, and it still respects your EMA 9, you can ride it a little bit longer. Now, from this move to 7 to 18, you can tell people were itching to take profit here because they're already retraced back over 100%, right? And then obviously the sell-off will start. Okay, so it's a low float runner. You have to get in and get out as quickly as you can.
Low floats move quick,
right?
A lot of room for profit, but then staircase up, elevator down. There's a lot that could happen.
Yeah, and if you look at what happened the following day, just following the fib channel, it just kind of respected the 61% correction, and then boom, it took off again. So, and look at the way that it just met a resistance on this highest, on the upper fib channel here, which is 261%, right? So the profit taking is in. So that's in a nutshell. If you guys go to my YouTube channel, I explained this a little bit more in detail. But FIB is your friend in terms of day trading goes.
Love it. Thank you for teaching us that. And like I said, you guys give The Rock Trading a follow. He's got all sorts of tools and insights on his page. I do want to get into Q&A here in just a moment. So live chat team, if you'll hit the like button and start thinking about some questions you have and typing them in. Before we get to that, let's dedicate a minute to maybe 3 stocks that you're looking at for next week.
Okay, sure. Let me share my screen here again. Share screen. Share screen. Okay. Good to go?
Yep, let's get you in there. Perfect.
All right, so of course I'm going to talk about FUBO. Pretty interesting price action this week, and it's obviously going to be affected by the overall weakness with the small cap. Something to draw your attention to this coming week. It's got personally for me, it hit this 2465 area right on this fib retracement. It's like almost science the way that it works. If this holds, then we could see a move back up to 36. At least that's what I'm looking forward to. But it's going to take some time to hit that kind of mark if this is truly the start of a new wave. So we'll see how it goes. But this is a critical moment for FUBO, whether it's going to go back to 22. I'm sorry, whether it's going to go under 20. I don't want to scare anyone. I'm very bullish on FUBO, but I'm just very aware of the price action. If this fails coming week, then we're going to see lower 20. All right, because it's got to come back down here. But overall, you still have higher lows. If this mark holds, then we can see a move back into 27, 28, so on and so forth. And the way that you make this kind of anticipation, I guess, if you look back on my daily chart here, this area between 24 and 27 has always been kind of a critical zone for FUBO, a decision point in the market, if you will. Here, just most recently on the wave to 35, we can see obviously clear resistance right on the bottom 2466, and then it broke out with high volume here. All right, if we start going back into the correction off the 60, you can see that this reversal doji right in this zone once again, and it's matching literally here. Okay, so the market clearly has memory. If you go back even further on this drop from the 60, it hit a support here and swung back north, but we know that was kind of a nice dead cat bounce on the way back down. All right, so if we go back into January of this year, you saw a critical moment for FUBO on the way to 60, or I'm sorry, on the way to 58 when we hit this area. Back on the ride from October last year, this was a critical moment, this zone right here for FUBO. So either we're going back to 18 or we're going to 50 and 60. So watch for this area to hold.
Okay. All right, FUBO. Any others?
You talked about this SNMP, which I was surprised.
Yes.
Fantastic. So I don't really have to do a whole lot of charting on this. I picked this up on the scanner. It's 127% short float, which is which blows my mind how much this stock has been shorted. And part of the reason why you've been green for the last 5 days, 6 trading sessions, is because it's getting a little bit of squeeze and a pop each session. Now, this broke the downward trend line and closed above on Friday. So I love the stock going up. If I just simply look left, nothing too crazy in technicals, but you can see that this can clearly, with a nice
some room
to go to 2 or 250 minimum. So we'll see.
Yeah, SNMP was a breath of fresh air last week. I think, like we discussed, the IWM small caps, there were a lot of stocks that were struggling, but that was the beautiful green candles all week. So we love to see that.
Yeah, there are going to be exceptions in the small cap world in terms of, that might have price action that is independent of what the overall small caps are doing. So this is one of them.
Yeah. Okay, so let's jump into the Q&A. You guys, if you have questions, go ahead and hit hit them up in the chat. Let's discuss. We do have a question from Tyler about compounding gains. He said, what is a reasonable but ambitious annual compounding rate for an account under 5,000? Do you have any take on, if not specifically, because that's a very specific question to answer, right? But just in general about compounding gains and any little mini goals to put in there to have an account that grows significantly over time?
I would say with the $5,000 account, you at a minimum at the end of the year you want to double your right. We're talking about 5,000 is relatively a small amount for some of the bigger traders, obviously. If you are a trader with $1 million account, your 5% means quite a bit, right? Or your 10% gains on a year is quite
absolutely.
So the first thing you need to be doing if you have a small account is you want to double this by end of the year, and you have 5 months to do so, and you should figure out how to do that. Is now your strategy for doubling your account by end of the year is that you have to take 5 to 10% base hits. Okay. More the better, obviously. 15-20% is a double. All right, 50% you're hitting home runs, and you will capture some of those type of gains. But if you can get away with 5 to 10% per trade and just continue to compound that, I think you'll hit 5,000 easily or double your account by end of the year pretty quickly.
And I do want to add on to that, because especially between February and May, I would say, when the market became more scalp friendly, you know, a lot of the plays didn't hold their gains. We would see 10 to 15% pops. Personally, I was a little spoiled with what we'd seen before that. And I had been holding out for bigger gains. And what I would end up doing is giving my profits back, because I was getting greedy. I was like, oh no, I'm used to 30, 40%, 50%. And we wouldn't hit that. And then we would just go back to what the stock was trading at. So I firmly believe in the whole concept of little by little becomes a lot. Yeah. I know 5 to 10%, it doesn't always sound sexy. It doesn't always sound like a whole lot of money, but I promise you that little bit will continue to add up.
Yeah, absolutely. If you learn how to stay disciplined with 5 to 10, 15% gains on each trade, you're going to do perfectly well. It's just, you know, getting into that rhythm and discipline and finding your right setup. It's also critically important as well. You know, with a smaller account, you do have a staircase to climb. So good luck to you. You're going to do fine, but you find your system, find your edge, you know, and you'll be fine.
Mm-hmm. So another question that I think is a great one is from Ken Charles. He says, when scaling in, do you scale in over a couple of days, or do you just scale in over the course of the day?
It's got to be over a few days, unless, of course, unless it touches my support in day one when I get into the swing, which I never want to see, right? You never have the intention of getting into a trade and hitting, and the price action drops on you. It's happened before for sure, but you want to scale in over courses of days. If it is a swing that is potentially a week to 2 weeks or maybe a month out, just be patient with it. You know, wait and check your indicators. Check your MA200s. Or even your MA100, if it's starting to test those areas, those are good loading zones or loading areas to stock up on. But just be careful, you know, how much you're putting into that play. If you continue to keep grabbing the dip or trying to catch a dip and it's going lower, then you need to just sit on the trade and let it play out a little bit.
Have a plan. And sure. I like when you mentioned scaling in, how, let's say if you're going to put $1,000 into a play, you'll do 333 at a time in 3 sections. So I love being consistent with that number, because it takes the guesswork out of it. If every time I open a new position, I'm allotting this amount and I'm scaling in like this, I think the thing with the stock market and what trips a lot of us up is there's so many different ways to do things. And sometimes you're like, I have high conviction in this trade. I'm going to do it differently on this one. Just because you have high conviction in one, it doesn't mean that's the one that's going to run, you know? So you may want to put 50% of your account in this one and give everything else 10%. But the market has a way of humbling us. And regarding the question that was just asked, one of my errors when I first started trading was I was great at scaling in. I was really good at it. But the question that you asked, which is super relevant, is I was so just like staring at the chart all day, like staring at the stock. Oh, it went down 5 cents. Bye. Oh, it's down 7 cents now. Bye. And then the next day, the day after, the rest of the week, I had killer opportunities to use that scale in and make it worth my money instead of obsessing over it in one day and thinking I had to get all my bullets in. So
Sure.
Great question. Definitely take your time with it. And guess what? If the stock runs without you, there are other stocks. It's fine.
Yeah, absolutely.
It's fine. All right. Well, this has been wonderful. John, I want to thank you for coming on. You're full of insights as always.
Thank you so much.
And yeah, and team, if you're tuning in, make sure to hit the like button. Give John a follow. He does have a Patreon, so if you want to sign up and learn from him, we will hook you guys up with his YouTube page, follow his Twitter. You do this thing where you do the hashtag pro tips, which I love. I just love searching the rock trading pro tips and seeing all the different data and insights you have. So thank you, and hopefully we'll have you on again at some point.
Absolutely. It's been a pleasure. Thank you so much.
All right. Thanks, John.
All right. Bye.
Bye. All right, guys, if you are still here, there's quite a few of you still here. Thank you for tuning in. John, this was an awesome show with him, and I think we're really excited to see what this next week has in store for us, and just managing our risk and not being fearful, you know, because you don't need to be fearful or euphoric. Both of those have emotional consequences, but just managing your risk. And if you're buying something, make sure you've got a plan, a setup. If it's a longer play, high conviction, that's going to be my go-to strategy this week. And no over trading, because I am susceptible to doing that, and I'm not allowing it this time. With that said, what I want to do is I have a book called Trading in the Zone. This guy right here. This is one of the first books that I read when I started trading. And I don't know if you guys can see, but I've got this bad boy marked up. It's all about trading psychology. It doesn't dive into the technicals and all the complicated stuff, but we all know that trading psychology is one of the most important elements of trading. You can be an incredible technical trader, but if you don't have this part in check, you might get in a little bit of trouble. So what I want to do is I want to give a copy of this book away to one of you that's tuning in right now. The winner will be announced next week's episode. And in order to enter for the giveaway, I want you guys to leave a comment in the YouTube channel right here under this video. And I want you to let me know either something you learned from this episode that was super insightful, or topics that you want touched on in future episodes. I mean, we're going to have some incredible guests on here, and there's so many different insights that we can get from them. So I want to hear from you guys. I want to know in the comment section below what you learned, what you're interested in hearing about, and that'll give you an entry to winning a copy of Trading in the Zone. And we will announce that at the beginning of next week's episode. So you'll have to tune in. And I want to announce next week's guest, because we have another incredible one. King Blamey from King Street Trading will be joining us. And he has just been really interesting to follow, especially this past week, because he's a master at playing both sides of the market as well. And I want to dive into all that. We want to tap into his brain and learn some strategy from him. So thank you, guys. It's been a great episode, and we'll see you next week.